All right. Good morning, everyone, and welcome. Good afternoon depending on where you are. My name is Cathy McKnight, and I am one of Digital Clarity Group's co-founders. I also lead our consulting pleasure, and it's my pleasure to welcome you today to our webinar, during which we're going to talk about EQT's recent acquisition of Sitecore. A few housekeeping notes before we get started, though. This is a 30-minute webinar, and it is being recorded. We will post the recording and the slides to both our site and SlideShare after today's presentation. Should we have time, we will answer questions at the end, so please do send us your questions throughout the presentation by typing them into the question window in the GoToWebinar panel. And if you are live tweeting the event, please use our Twitter handle at @just_clarity, which is shown at the footer of all of today's visuals as well. So let's get started. For those of you who may not be familiar with Digital Clarity Group, we are an award-winning research advisory firm focused on the technologies and practices that drive customer experience management, or CEM, in our digital age. Our clients are enterprise adopters, technology suppliers, and service providers who build and deploy solutions for CEM. We conduct and publish research, offer consulting services, and are recognized globally as one of the thought leaders in the market that we cover. Again, for those of you who may not be familiar with us, this is our team. Joining me today is my colleague and fellow DCG co-founder, Tim Walters. Tim is a frequent and well-respected thought leader in the CEM industry. At DCG, he covers digital disruption, the technologies and practices within the CEM footprint, including web content management. Prior to co-founding DCG, Tim was a senior analyst and advisor at Forrester Research and served as the director of international marketing and strategy for FatWire Software, where he was instrumental in charting the transition from WCM to Web Experience Management, or WEM. Welcome, Tim. So we're covering today yet another WCM vendor that has been bought. There seems to be a never-ending newsreel of technology vendors being acquired.
Yeah, absolutely. Thanks, Cathy. It's a pleasure to be here and join you in this discussion. And yes, as you can see here, acquisitions are, of course, a very common occurrence in the web content management space. This slide illustrates really just a very, very few of them, but those that have been among what you might call some of the leading vendors. And many of these involve previous acquisitions or mergers that are not shown here. So, for example, Altarian, which you see under SDL, was bought by SDL in 2012, and they had previously acquired Media Surface in 2008, and then the serial acquirer, OpenText, just purchased a bundle of solutions from HP that mainly represented the software assets of Interwoven, which had been acquired by Autonomy in 2009 before HP purchased Autonomy in 2011. And that transaction, as you may remember, reminded a lot of people of the movie Ishtar.
Ishtar, great analogy. And for those of you who are not familiar with the movie, you haven't missed anything. But if I can interject here on the topic at hand, these acquisitions seem to be never abating, but the price tag keeps climbing and climbing. Is CEM the driving force behind the perceived increase in value that's being placed on WCM and what's driving up the purchase price?
Yeah, I mean, in the first instance, precisely if we stick with this notion of WCM, web content management, because frankly, much of what firms are trying to do in the area of customer experience management so far is still browser-based. That is, whether it's in the fixed browser or mobile browsers. And they're basically trying to optimize web interactions of one kind or another. And that is, I think, clearly, slowly, finally expanding as firms look beyond the necessity of expanding customer experience beyond the browser, so into apps and kiosk and call center terminal and face-to-face interactions in the stores and virtual and augmented reality and whatever is going to come next. And when that expansion takes place, or as it evolves, we think at DCG that content management will continue to remain a central, if not the central system within the kind of customer experience management ecosystem of applications. And when that happens, then interestingly enough, we kind of go backwards terminologically, because we evolved from web content management evolved out of content management systems, CMSs, and it might be more appropriate to now call those content engines at the heart of customer experience, content management rather than web content management. So this is the framework for EQT's acquisition of Sitecore, which was announced kind of interestingly enough on April 1st, on April Fool's Day. So let's see how this transaction compares to and differs from some of those others that we just illustrated. So I think it's possible to argue, and in fact, I'm now going to make that argument, that Sitecore is in a certain way the greatest success story so far in the history of WCM. And so, like many vendors, it started as a service provider called Pentia in Copenhagen in, I believe, 1998, although I've also heard 1999. And then they spun off the Sitecore product business in 2001. Pentia still exists, by the way. I just met some of those individuals at an event in Prague. And they're a big Sitecore partner, unsurprisingly, but they no longer have any financial or business relationship with Sitecore per se beyond that partnership. So this was the period then, 1998 and so forth, just before the dot-com crash, when startups were making interwoven and vignette rich and established businesses were beginning to realize they needed to have a WCM for some kind of corporate web presence. And a lot of the smaller vendors that we've seen either come and perhaps go were getting started. So like Sitecore, getting started as a services company. So FatWire was founded in 1996, Tridion in 1999, Day Software in Switzerland going back to 1993, in fact. Now, unlike hundreds of now unknown WCM vendors, Sitecore survived the dot-com crash. And unlike dozens of European vendors, but more remarkably, they managed to get a solid foothold in the North American market. And then in the last few years, while their similar-sized competitors were acquired by larger software firms, Tridion was acquired by SDL in 2007 for $94 million, I believe. Day by Adobe in 2010 for about $240 million, and FatWire by Oracle in 2011 for around $160 million. Sitecore remained independent, while of course taking investment rounds throughout this process, but they did remain independent.
Yeah, so that begs the question, what did Sitecore do so differently from all the other CMS vendors that are, quite frankly, no longer with us, that really enabled their success? They really do stand out, breaking barriers where others really couldn't.
Yeah, I mean, they what did they do differently from the vendors that are no longer with us, and what did they do differently from some of the vendors that are but have not grown to the same extent or been as successful, quite frankly? And of course, there are many factors behind that. Probably the most important factors are the ones that we don't know, such as key management hires or key management decisions that they made that could have gone the other direction, or investments in just the right things at just the right times, and so on and so forth. But one of the big factors is that we do know is that not that long, up until not that long ago, the first gating question when a company was considering purchasing or selecting a WCM solution was, should it be .NET or not .NET? That is usually .NET or Java. And in those days, if the answer was it's got to be .NET, then Sitecore, by the early 2000s, had become established as one of the clear leaders in the .NET WCM space, and so they were often considered by companies that felt they needed to have a .NET solution for one reason or another. And as I said in the blog post about the acquisition a few weeks ago, in this regard, Sitecore also benefited immensely from Microsoft's long and very, very implausible, actually hilarious insistence that SharePoint was a capable WCM system when Microsoft should have either built a true WCM or purchased a real WCM solution.
Yeah, I think we've all bared the brunt of the SharePoint as a WCM. And of course, we would have thought Sitecore would have been a prime candidate if Microsoft was to purchase a WCM vendor. We would have figured Microsoft would have been first in line.
Yeah, that's exactly what we all thought. And who knows? Maybe it'll still happen. But I think the price has gone up. To finish the story, speaking of acquisitions, Sitecore was not acquired, and they also avoided, mostly, I think entirely, if I'm not mistaken, avoided acquisitions, they expanded the product set mostly or exclusively on internal development. But then suddenly they deviated from that behavior in late 2013 when they acquired the ex-Microsoft Commerce Server solution from an Ottawa-based company called Smith, which I believe was previously called something else, which I can't remember. And we'll come back to that acquisition because it's very key, we think, to Sitecore's future. And that kind of brings us up to date with EQT's acquisition at a valuation of 1 billion euros, and that makes Sitecore an e-unicorn, an EU unicorn. Don't blame me, I didn't make up that term. And compared to, you just compare that valuation to the prices for the other vendors that we saw that were about the same size not a few years ago, such as Fatwire, Tritium, and Day. And the initial press releases and the subsequent discussions characterized this transaction as both an acquisition and a partnership. But let's be clear, there's no doubt that EQT has taken a very substantial majority ownership, if not virtually the 100%. I can't be sure. However, they do also stress, that is, EQT does also stress that Michael Seifert and the co-founder and the CEO and other senior executives at Sitecore have what they call financial incentives to remain with the company under the new ownership. So this isn't a case where they're coming in and clearing out the C-suite and putting in their own people. And so let's just look at who is this new owner. If you're not familiar with them, EQT was established in Stockholm in 1994. It now has about 300 employees worldwide. They have embraced, according to their website and their various statements and videos and so forth, they've embraced from the beginning a commitment to what they call responsible investment and long-term ownership and growth. I think it's quite telling that nearly 20%, I think 18% of their current portfolio of about 65 companies has been held by EQT since 2007 or earlier, in some cases going back to 2007. So 7, 8, 9, 10 years that they've been holding on to companies. So in short, there's no evidence, at least, I can't be positive about this, but there's no evidence that EQT buys companies in order to flip them for a quick profit or to break them up and sell the parts and so on and so forth. So since this is a private equity acquisition, I just want to clarify what that means in terms of compared to a venture capital investment or to an acquisition by another software vendor. I can't seem to advance the slide, Cathy. There we go. Now I've probably advanced it twice. So similar things have been going on in the last year or year and a half. Excel KKR acquired both Episerver and Ectron at the end of 2014. And more recently, it was announced, even after Sitecore, that K1 had acquired both Crownpeak and Active Standards this year. Private equity investors, as I said earlier, typically want to own the company. They're looking to control the company, not just make an investment in it. And so they often look for 100% ownership. Compared to venture capitalists who are investing at the beginning and are willing to take great risk in order for a large payoff, private equity usually looks for low-risk, late-stage investments, that is, established firms with a proven market, a proven product-market fit. And it's not a question of betting on a future as you do with a startup, but it's about optimizing a proven proposition in order to make it as profitable and, of course, as valuable as possible for ultimately selling it on at a profit compared to the amount that you invested in it.
So what does Sitecore and the new owners need to do to grow and keep on this path of success that they've enjoyed so far?
Yeah, that's the key question, of course, and it's also the key question for anybody who's currently using Sitecore, and in fact, it's the key question that anybody might want to ask about any vendor that they currently have or that they're considering. So first, need to look at this, this transition that a lot of companies have been going through or trying to go through. So like many WCM vendors, Sitecore has spent roughly the last decade trying to transition from WCM to something like customer experience management or support for customer experience management. And in fact, their online marketing suite, the OMS that was released in 2009, was one of the first attempts to combine analytics and email and marketing campaign management and optimization capabilities in one tool set, as it were, and then to marry it to a content system in this case. And that OMS has been continually developed and extended, and it's now called the Experience Platform, or XP. But there's one problem in this story of Sitecore evolving into what I call Sitecore, and that's that very, very, very few Sitecore customers use the Experience Platform or its earlier manifestations under whatever name it had. Now, to be fair, that's partially a commentary on the immaturity of the business. That is, businesses are not willing, although they ought to be be investing in those kinds of tools for optimizing relationships with customers. And as I said earlier, they're still primarily thinking about web content management. But then the fact that not very many people are using Sitecore's marketing tools so far, that might not be a serious problem, because there's a lot of evidence, which we don't have time to review here, but we've written about it separately, and we'd be happy to talk about anybody about it one-on-one, that this current marketing-centric customer experience management is not keeping up and cannot keep up with consumer expectations for superior experiences. So even the clear market leader in marketing-centric customer experience management, namely Adobe, has been talking about, the tagline for the last year or more has been marketing beyond marketing. And that's a kind of cumbersome way of talking about precisely what needs to be happening. That is, marketing-centric CEM, or CEM needs to expand beyond this marketing-centric focus and take on some of the holistic and broad support from the entire organization. So that means that, kind of to put it bluntly, Sitecore's failure to make a real impression with a digital marketing solution so far may turn out to be one of their biggest opportunities, because as companies start to realize, as I just said, that CEM is far larger than marketing, and as they begin to take a kind of a holistic company-wide approach and strategy to customer experience management, then Sitecore may be able to leverage their strengths as a content engine for customer engagement and customer experience management. So kind of concluding this part, we think there are three core areas where Sitecore can benefit from EQT's investment and support. One of these is commerce. The Microsoft Commerce Server that Sitecore acquired was, quite frankly, to say the least, never a leading commerce solution. And at the time of that acquisition, when they acquired Smith, we advised Sitecore to apply their development skills, their considerable and proven development skills, to quickly improve that product and make it a competitive proposition. Now, in fact, we now know that Sitecore is creating a new commerce solution from scratch. So not many details are available, but this is really interesting news, and it suggests that what Sitecore valued most in their acquisition of Smith in 2013 was the experienced commerce development team. I heard some figure about the dozens, if not hundreds, of years of commerce expertise that are embodied in that development team. I can't remember what it is right now. So they probably were buying the team rather than the rather inadequate technology that was available at the time. And if you put that together, this notion of a new commerce solution, you put that together with the required marketing and sales and support, then that would finally give Sitecore what it has never had yet. That is a second arrow in the quiver, a second standalone product in the catalog, which they could sell separately from the core content management offering. Secondly, the cloud. It's given their technology chops, as it were, Sitecore's been uncharacteristically slow to support cloud services. And that, again, may be justified to a certain extent by their relatively large number of relatively conservative mid-market or sub-enterprise customers. nevertheless, for whatever reasons we've arrived at where we are today, the company does need to invest, and I mean invest money, in a solid cloud capability, and they need to do it quickly, so they need to invest even more before their limitations in this area become a really painful competitive disadvantage. And finally, consumption-based pricing, just to continue the C theme. Sitecore is in the midst of a shift to consumption-based pricing scheme, and this should be a great benefit for our customers, but it is also undeniably disruptive for cash flow and for revenue recognition, since Sitecore doesn't get paid until, and even unless, the product is implemented and used. You get paid for the use, and so there's now, instead of getting paid up front and then beginning the implementation and ongoing maintenance stream and so forth, they only get paid once the thing has already been implemented and is now actually in use and proves its use so that it's used more broadly and so forth. So in short, all three of these areas require investment in order to maintain Sitecore's momentum or to build new momentum. And those kinds of investments are exactly what EQT has pledged to provide in the releases that we've seen so far. So they not only took control of the company, but they've also explicitly said that further funds will be available in order to grow Sitecore's business, in addition to the amount that they invested in order to take control. And so finally, this fourth one, this is not one of those three, but we think Sitecore should also rethink their existing tools, basically the experience platform, that is their tools around data analytics, intelligent capabilities, and so forth, with the aim of helping companies comply with and even begin to derive some benefit from the growing privacy concerns that are expressed by consumers in the form of ad and tracking blockers, and are also now codified directly into law in the form, for example, of the EU's new General Data Protection Regulation, the GDPR. And by the way, we're going to be doing a future webinar on the impact of the GDPR if you want to know more about it. The point here, or the aim, the dream, would be to use consensually provided data and data captured tracking and profiling in order to provide genuine value and perceivable improvements in the experience for the consumer. And that's something that we don't usually see so far. And this is, of course, far from a unique opportunity for Sitecore, but again, it's Sitecore's relative lack of success in marketing-centric CEM means that it has fewer vested interests, and it can pivot perhaps more quickly than some of the competition.
Thanks, Tim. From your mouth to EQT's ears. There are a lot of people and companies and analysts watching very closely to see what happens next. So in our last few minutes, I'd like to talk about, what does this all mean for you, the companies and teams using Sitecore now or considering acquiring the solution? Some of you may be asking yourselves, should we start looking for a new CMS? The last thing you want to be done is stuck with a dead horse. So what should you do? Well, not to sound like the consultant that I am, but that all depends. It depends on a lot of things, and there are several questions you should be asking yourselves internally, connecting directly with Sitecore or EQT, as well as talking to your implementation partner. So let's start with some of the questions you should ask internally. A lot of people, a lot of companies, and this is particularly for those who have Sitecore installed, is, this is an opportunity to check in with your WCM, the team that runs it, works with it, and the organization. So often organizations that we work with spend months, even years, selecting their web content management system, and then once it's implemented, they forget about it. They assume it all is running well and it's still meeting their needs. Sure, it's updated most of the time, but rarely do organizations do a true health check of the technology to ensure that it's really doing what it was implemented to do and staying the course and evolving. So a great place to start in this kind of situation is by asking a few important questions internally. Things like, have the WCM needs of the organization changed significantly since Sitecore was installed? Has there been a pivot in the strategic direction of the organization? Has there been any major acquisitions or divestitures that have changed the go-to-market approach? These are all things that impact how you use your technology. And if they have changed, is Sitecore still meeting the needs of the organization? And when was the last strategic review of the technology, the team, and the associated processes? This is a great time and reason to do just that. And then after you've asked those questions internally, ring up Sitecore, ring up EQT and ask them, get the word from the horse's mouth, so to speak. What were the reasons behind the acquisitions? Don't expect any, deep, dark secrets. It'll be probably much of what's been shared via the press releases and whatnot, as well as the analyst coverage. But, great to reach out and ask the questions. Talk about the roadmap. Has this investment changed the roadmap and the product roadmap? And how does that affect you? And what are the future plans? So as Tim mentioned, Sitecore's leadership is still firmly in place, but ask the question, get them to answer you directly on that. Talk about account management, support services. Are they talking about changing how your account is going to be managed? Things like, does this impact the contract that you have with them? And, other things like, when's customer event planned? What's coming up next? It's always great to go and, do a face-to-face where you can and actually speak with the vendor and other customers. And see what they're experiencing through this change. And then finally, reach out to your implementation partner, those who helped you implement Sitecore, or maybe your agency of record, if they are Sitecore partner. And these are people that are connected to the technology. They have to, it affects them as much as it affects anyone else. And they often know the product and the company as well as the vendor itself, because the technology and its implementation and the maintenance, it's part of their bread and butter. They're going to dig deep to understand all the nuances of the acquisition or the investment and what it means to them and their clients. So take all the questions that you ask Sitecore and EQT and ask a Sitecore partner. A lot of them will be more than happy to talk to you about the opportunities that this presents and what it could mean for you. And if you need help finding a Sitecore service provider partner, certainly you can go to the Sitecore site, or we actually have an online directory where you can go and find a partner that is either local to you or one that you might know. And you can go to our site to check that out. And keep in mind that, ultimately technology is just a small part of the equation that you're trying to successfully solve with a web content management system. So you have to make sure, going back to checking in with your technology and the team that's not only running it, but maintaining it, as well as the other technologies that are interacting with your WCM, what has changed from that perspective since you implemented Sitecore or considering implementing Sitecore, and how is that going to impact? And if ultimately, after all that digging and discussions, you decide that it's time to start looking for a new WCM or a partner, or perhaps do a more formal evaluation of your organization's current customer experience management or web content management technology needs or strategy, there's help out there. You can visit our site for some great selection resources or contact with your questions. We're always happy to talk about what's going on with you and your WCM needs. And again, reach out to your service provider. They, again, will have a world of information and can help you. And unfortunately, speaking of questions, we were hoping to take questions. We had a few, but it looks as though we have hit our half-an-hour mark and really don't want to keep people past their time. But Tim, I'm going to ask you one last question to close this out. What's DCG? What was, tell the group a bit about our call on the acquisition. And the internal
wants to hear the call.
Yeah, and the internal dialogue that we had.
Yeah, they tuned in for that, and they wanted to hear it in the first 5 minutes. And the answer is I can't tell you, or you can't handle the truth, or something like that. But seriously, as you just pointed out, it's simply too early to tell how this will all play out. But that's true about every vendor, whether they've been acquired in the last year or not. So I'll just repeat what I said earlier. If we haven't yet spoken with EQT, but if you listen to the Sitecore, or talk to the Sitecore executives involved in the transaction, or you simply research EQT, their website, eqt.se, has a lot of information. Then I'll just say again, there's no indication either in the way the deal has been discussed nor in EQT's origins and history as a private equity investor that this is a kind of dine and dash operation. I'm pretty confident that Gordon Gekko would not get a job at EQT. So in short, the change of ownership alone the change of ownership alone, I stress, seems like it will have no negative impact on Sitecore's future, and potentially will have a very positive impact if they're, to put it bluntly, going to make a lot of funding available in order to sustain or grow the growth rate that Sitecore has been enjoying in the last few years. But of course, that means everything else besides ownership, if we're right about that part of the call, management decisions, competitive moves, macroeconomic conditions, et cetera, those are still in play and could spoil the party. But again, that's true of every other vendor as well.
All right, great. Thanks so much for the insight, Tim. This has been great. And thanks to all for joining. As I mentioned at the outset, recording of this presentation will be posted to DCG's website as well as our SlideShare account in the next couple of days, and we'll be sure to tweet it out and share it with everyone. And for all of you who ask questions, we will get back to you directly. We have who has asked what questions, so we will reply directly to those as well. And remember, if you have any questions about this or other acquisitions that have happened, or WCM, CEM, please feel free to give us a call. We're always happy to have discussions and engage in that. So thanks all for joining. Tim, thank you very much for your insight, and I hope everybody has a great day.
Thank you, Cathy.
Cheers.
Ciao.